Let's go live now to AMP Chief Economist Shane Oliver. Shane, great to have you back on the program once again. First of all, we'll get your tip for Cup Day, not the horses, the RBA.
Well, to use a bit of racing lingo, the RBA does have a track record of raising rates or changing interest rates on Melbourne Cup Day. So I didn't think I'd be saying this, but the inflation numbers and the RBA's own commentary in the last couple of weeks tell me that it would be dangerous to bet against a move on Melbourne Cup Day. So I think they will hike. And that's consistent with the inflation surprise we got last week and the hawkish language we've seen from the Reserve Bank. I'm feeling nervous about it because I'm already worried about a recession next year. But I've also got to assess what the Reserve Bank will do as opposed to what it should do.
Yeah, what's going on in the economy at the moment, Shane? I know that's a kind of big question, but if you could try and answer that for us, because, the inflation data shows that it is still sticky. Hate that term, but let's keep on using it. But it does show that throughout the year it has slowed and underlying inflation is actually better than we first thought.
Yeah, it's coming down at a reasonable pace. Perhaps it surprised on the downside in the June quarter, whereas in the September quarter it surprised a little bit on the upside. But the headline rate of inflation was, don't forget, around 8% at the end of last year, currently around 6. Around 5.4. It's come down more than that, come down to 5.4, so that's a good move. The underlying rate has come down again from, I think it was around 6, 7 at the peak. It's now down around 5.2 or thereabouts. So they've all come down. It's just that underlying measure was expected by the Reserve Bank to be 4.8% by now. So they were expecting a faster decline than we've seen, and therefore they're likely to have to revise up their inflation forecasts, which is sort of what Michelle Bullock, the governor, was alluding to. And I think probably what also the IMF is referencing to some degree, that similar concerns to what the RBA has been talking about recently. And then when you look at the economic data, I think things are slowing down, but they're still being held up a little bit by the strong population growth. And I think that's been the big surprise this year. We're seeing very weak retail sales. They're down on where they were a year ago on a per person, real terms. They're falling at a rapid rate of knots. But we've got this record population boom on the back of record immigration levels, and that, of course, is keeping demand elevated compared to what it would otherwise be. So even though individuals might be doing it tough, in aggregate, there's still demand out there from that strong population growth, and that is affecting, of course, services demand, which is affecting services inflation, hence that reference to sticky services inflation.
Yeah, right. So migration, there has been some conjecture about these businesses, big and small, are still crying out for workers. So they're saying, we need these skilled migrants, absolutely. But on the other hand, some of the data just show that a big influx of migrants is actually the reason that inflation is remaining so high. Is that correct?
That's correct. It's a messy picture. Think about it in relation to people trying to find housing in Australia. They're having to compete with a new influx of immigrants, many of them students, of course, but whatever it is, they demand rental accommodation, need accommodation. So that's pushing up rents. At the same time, that's affecting the established home buyer market and pushing some people out of the rental market into the home buyer market and pushing up house prices compared to what otherwise would have been the case. And at the same time, of course, when you've got more people in the country, on the one hand, you've got more workers, and that's leading to a sort of a modest rising trend in the unemployment rate, but it's still very low. But you've also got more demand, and more demand puts upwards pressure on prices, all of which, adds to the pressure on the Reserve Bank to raise interest rates again. So there's always a difficult balancing act. Yes, we needed more immigrants to come in, fill up some of those labour shortages that we had coming out of the pandemic, but I suspect that we've now gone from a point where we've got an undersupply there to an oversupply.
Oh, you think we're already at that point? Oversupply?
Well, if you look at immigration levels, we're running at 500,000 for the last 12 months.
That's a lot.
Historically, that's 500,000 people coming into the country in 12 months. Population growth is up around 2.5%. That puts the rate of population growth at the fastest since the early 1950s, when you had lots of people coming from Southern Europe and that great migration boom. But the absolute numbers Yeah, 500,000 is the most we've ever seen. That's akin to like Newcastle or Wollongong or something like that. Massive number of people coming into Australia in a short space of time. And that obviously, yes, it helps ease labour shortages, but I think we've gone to the other point now, other extreme now, where it's actually adding to costs in the economy, whether it's housing costs, rents, of course, and prices generally. And so I think it's just got to the point where it's a bit too high. I'd say way too high, in fact.
Shane Oliver, good to talk to you. Food for thought. And I'm going to ask every single politician on this program what they're going to want to do about migration, because there are no clear answers from them. Thanks so much.
Thank you. Thanks, Laura.